Hello guys, this is FX Mesh coming your way again. What is going on, guys? You are welcome back to my Forex price action analysis for the week 27th of June 2022 to 1st July 2022. We're going to start by looking at some few trades I took in the week. I think it was 21st of June 2022. I took a couple of trades. Then we'll see how it went and how the market behaved, and then also we'll now go back to our main analysis for the week, um, and see, trying to understand the behavior of the market and what to expect in the coming week and how the US dollars had performed prior to this time. I'll see you in the chat. Smashing it. What is going on, guys? This is Tuesday, 21st of June 2022, and New Zealand time 11:59, about moving into the Wednesday early morning. I'm taking a position now, GBP USD. The reason why I took this position was that if you look at this position properly, I can see I'm using, first of all, I'm using the multi time frame analysis, and the principle is that once psychological levels of these lines here, the horizontal lines here, meet with trend lines, and their weak rejection around that meeting, take a buy. You can see that they will be pushed to the upside. Now I've just been alerted that there is we just moved into the US session now, so I expect this market to reverse to the upside. But technically speaking, you can see weak rejection here, negative bearish weak rejection, showing that it's time to reverse. Let's look at the indicator and see what's going to happen. Yeah, so the indicator is showing inverse hammer, and once the indicator shows this inverse hammer, it's also in line with the fact that the market is going to push to the upside. But what I want is I want the market to move up so I can be in profit, and I will see how this market turns out later. This is the time frame 15 minutes entry, using 4 hours analysis to draw these lines and what have you. We'll check out how this thing turns out later. Back to GBP USD, I was looking at the previous video was showing how I was anticipating the movement of the market around this region, and you can see that there was multiple weak rejection around this area. There's a significant consolidation. I actually jumped out. I expected the market to push upwards, but I jumped out of this market. This was my expectation, but somehow, you know what happened? It pulled it after I jumped out. Since I think some minutes later there was a push to the downside, so I was busy doing other things. The coming to this area, I think I had some losses here also. I was thinking, reason why I took this trade was that I saw weak rejections here. You see weak rejections here, and I entered. The weak rejection was a bullish weak rejection, and once you see bullish weak rejections here, it means that it's a sign for a sell. And I entered the sell. You can see I entered a sell, expecting the market to at least kiss this high point of the week. But what happened? The market came down here and pushed to the upside. So actually I missed that one there. I think I had some losses there. Then I allowed the market play out, and can see the question is, what am I looking for? I'm looking for where psychological levels, which are the horizontal levels, meet with trend lines. Once you see any point where they meet together, where lines meet together, is usually a point of interest around that area. So it started playing out, and you can see this one again. I don't think I took this one. I don't know if I took it. I can't remember now. then by note it entered the marking. You can see how I marked it from here, and I got a sum into profit. Why? Because I could see multiple rejections here. Once you see weak rejections, it's always a signal to enter. Yeah, so I use this Hekin Ashim candlesticks are very good. It gives the sign, the color coding gives you a significant sign of indication of where the direction of the market is headed. And that's right now. It is Friday 24th June 2022, and the market is already beginning to show some degree of movement, push to the upside. You can see market a lower low, you know, and a height here. It has built. You can see the impulse built up here, push to the downside, and again up again, and just like that right now around this area. Now let's go over to gold. I'm taking on gold. Now you can see I'm already in profit. I took gold. The same principle. The principle I'm using is the multi-time frame analysis, the multi-time frame strategy, where key levels and psychological levels and trend lines meet, and I take my trade with when I see weak rejections. Now if you look at it, if you go to a 4 hours time frame, let me show you how I took this trade. If you go to a 4 hours time frame, maybe on 1 hour, let us try and prepare the market in such a way that we can understand. Okay, let me show you what I did before. I entered this one. This one was a testing. This one I tested this level. Let's see what happens. Let's see. I got into one here. Okay, that was sometime good. That was not this. Maybe later. It was early this week. Okay, let us forget about that now. Let's go over to this one now. This one now, right now, you can see I'm in profit now. I'm in profit now. How? Look at it. Look at the on entry for $10, $11 up now. This is a live trading with 1,700 US dollars account. You can see my positions. You can see my positions running. I'm profit now. I'm in profit. Look at it. You see, I'm on profit. Once above this line, it's on profit because I'm trading the reversal of what the market is doing. It's creating, you know, higher highs, lower highs, higher highs, you know, lower highs, higher highs, lower highs. So I'm expecting market to bounce, to push to the upside. Now you might not be able to see this clearly because the candlesticks for bearish and bullish are in one color, so it's black all through. So let's go over to trading views and see what I mean. You can see gold. See, now I use different kind of psychological ideas and technique to actually figure out the way I trade. I combine a lot of things together to be able to find the best position for me to be in the right side of the market. Now if you look at this trade I took, you can see that there's a significant push to the downside. This is an impulse. This impulse ended here, and there was a kind of an attempt for the market to push to the upside, and it bounced again, and it kept bouncing. One, two, three. Another 3 bounces, and you can see weak rejections here. Now let's make it bigger so you can see what I mean. You see, when you zoom closer, you can see a double shape form, a double bottom. 1, 2, 3. You see, so I'm expecting to push the market to push to the upside. Meanwhile I've already set take a profit here. I entered multiple positions here and take profit here. Then also want some take profits here as well. This is my TP2. TP2. So that's what it is. So it's live trading. I'm already in profit now, and the most important thing in trading is to see the best opportunities where you can take advantage of the market. The market just does what it wants to do. You are the one that is to figure out exactly what you are supposed to do. You are supposed to look at different things. You can see clearly weak rejections here, here. These are touches on this line. This line was derived from, if I go to a higher time frame, you can see how I came about that line. So once weak rejections touch lines, trend lines. Trend lines are very important lines, very, very important lines. And I drew this trend line, this green trend line. Look at this green trend line here. I used it as a point for my reversal. Let's go to higher time frame. You see where the line came out from a very, very long, from the past. Look at it from here. I drew it up because it was there were touches here, touches here, touches here. So different times the market has touched. So when the market cuts through that area, now I go to 15 minutes time frame and zoom closer, and you can see where that green line has passed through. You see it? So there was a touch there. So you see the green line here, this green line here. So you can see the market came, it bounced here. And now one thing you need to pay attention to is the previous impulse. When it's a significant impulse, the next thing that happens is always a consolidation. When it's a significant impulse, the next thing that follows a significant impulse, whether it's upwards or downwards, is always a consolidation. Look at it. Now watch me. A push to the upside. See the impulse. After it reverses back, what happened? It started to consolidate. Up, down, up, down, up, down, up, down. Then it's now expected to what? Push to the upside. You need to have that overview when you are trading. Now let's go over to other ones in the past and let's see what I mean. After a significant impulse, whether up or downward, a significant impulse to the here now is a significant impulse to the upside. You can see a consolidation and it started pushing downwards. It started pushing downwards. Now push to the upside and it shoots to the downside, right? Then you see consolidation. As consolidating is trying to push to the upside again, consolidating around a trend line. So you need to understand that the market works in this way. Once there's sorry, let me try and explain what I mean. Let's see, let's take this one. Okay, now if the market is pushing, for example, the market is pushing up like this, higher high, lower high, lower low, higher low, lower low, higher low, lower low, higher low, higher high, higher low. Or let's push it, let's make it a straight line somehow. Okay, this one keeps going straight. Then what happens is that the market starts to show some sign of reversal. But when it's reversing, there's always, if you draw a trend line, trend lines are very important. If you draw a trend line in the direction of where the market is going to, you can see that at some point the market broke this trend line. So this area of change of character is known as the consolidation region. So that's the idea I used. One of the basic concepts of trading you need to understand, because when the market has changed direction by consolidating, it's a good signal. It's a good signal, not like a confirmed signal, but it's a good signal that the market is going to head in the direction of the opposite direction of the previous trend. This trend is going up here, so the direction of this previous trend, which is the previous trend, which is this upward trend, is now going to be pushing to the downside. Then you begin to look for trading opportunities here. Now in trading, there's something you also there's a tool I always like to use to identify where key potential points might occur, and it's called the Fibonacci retracement tools. So I use it to measure the area where I think the market is going to pull back, and I also take advantage of those kind of things. So now I'm looking at this particular trading opportunity for gold. I hardly trade gold because I'm still testing gold. I believe that gold will play out the way I expect it. I think I've checked a lot of things. I have enough evidence here. Weak rejections. I'm trading against a significant push to the downside, a significant impulse push to the downside. So there's consolidation. After consolidation, there should be a reverse push to the upside. And secondly, thirdly, I can also use the Fib tools to measure areas of interest. Like for example, now I have my Fib tool here. Now I put my cursor here and I will draw it to this level. Now what do? I click it here, then I bring it down, and I watch the market to certain. It's not too clear here, but I will try and move it so I can show you three points I'm looking for. Now these 3 points I'm looking out for, there should be reversals around these 3 points. These 3 points, 0.618, 0.5, and 0.32. So once the market is going to let's put it back again. So I look at the market. Trying to come up here. I expect the market to come up here around this region. Those 3 points I said is either 0.382 or 0.5 or 0.18 region. Then we expect the market to reverse backwards, like a kind of a pullback. Like this is a pullback, sorry. Then it continues in the same direction of this trend. So that's what I expect before it not start pushing to the upside, because the overall trend is upwards. It's upwards because it's upwards, but there will be some pullbacks along the line of action here. So it's a lot of things to take, but I hope you learn 1 or 2 things in this particular video. I expect to come back to it to show you how this market plays out. So we'll be back again later. See you in the next one. Alright guys, back to the screen. Now let's go to GBP USD. Now GBP USD, 20th of June was the start of the ending week now, and let's see what happened. The market, after doing my construction, I draw my 2 lines: high of the week, low of the week, psychological levels. Then that's on 4 hours time frame. Then enter a 15 minutes time frame. Then market started pushing. I marked this place, but I didn't enter. I see that it was a good sign for a buy. You see I had to push to the upside. If I have entered here, I would have made a profit here. It came back and touched the high of the week, started pushing upside again. You can see this point again, just like I started pushing upwards, and you see that at around this area, I entered this place like you watched in the previous at the beginning of the video. You can see when I was explaining when the market was here and what I expect, and that I entered here, but I later jumped out of this area. Okay. Of this trade, because I didn't like the way the market was behaving. The US dollars was getting weak, and it struggled a bit. Then it pushed down to the downside. Then it went up again. Then I like I said before, that I entered this one. I lost this one because there was I saw this weak rejection, for a bullish weak rejection, which gives me a sign for sell. I entered the sell, and I put my stop loss here. And you see what happened? The market reversed against me and pushed to the upside, meaning that gold gained more weakness, while GBP gained more strength. That's why I pushed to the upside. So I lost this trade here. Then the market pushed down. I didn't trade in this one. And look at this one. I marked this one. I'm not sure I entered this one. And I think I don't know if I entered again. I'm not sure then. You see this one was very good. It's a wonderful trade. Push to the downside. I entered because the market was giving me weak rejections. Once you see weak rejection touching a key level, it's a good sign to enter. And you can see it. So weak rejection hitting here, take it buy again up, just like that. Look at this one again. Weak rejection touching a key level, and it was a testing. I know I didn't enter this one. I got this one. So just like that. Once you're able to create a solid layout, guys, you will get good opportunity consistently. That is how it goes. Now, looking forward to GBP USD. What do you think is going to happen? Well, I don't know what's going to happen, but what I think is, first of all, always look at where the direction of the market is headed. Now, you can see from the screen that the market is pushing to the upside, so you can have as well GBP pushing to the upside, meaning that GBP is, as of now, GBP is gaining more strength while the US dollars is getting weak. Where the US dollar is getting weak, while GBP is gaining strength, and you can see from the news that is showing that the US dollar is gaining. Let me show you what I mean. Okay, I think it's so. Yeah, it's US dollar softening earlier Friday. New home sales, Michigan ahead. So earlier Friday, you can see the market is pushing to the upside, meaning that the US dollar is getting weak. So let's see what's going to happen when news comes out on Monday or Tuesday. When the market starts, we'll see how it goes. Then what we want to do is that we want to draw, we want to see how the market goes. We can even as well, we can even draw a structure here. Yes, and draw a structure here, and you know, begin to look for how market's going to react. So once the market comes down here and gives you a bearish wick here, take a buy to the upside, to the next level, to the next point where you see wick rejection. So every candlestick in this one is a 15 minutes candlestick. So I day trade more than I swing. Now let's go over to USD CHF. I took USD CHF. Where are you? Yeah, USD CHF. Yeah, I actually, well, that was on the 24th. This Friday is on Thursday. I think I entered this one. It was like this. I entered it for me. How did I get this trade? You can see that the same principle: the low of the week, high of the week. This is the high of the week. This is the low of the week. Market came down using multi-time frame analysis. Because I saw weak rejection here, touching this key, I entered, and you know, my take profit around here, somewhere around the middle. Because one thing with me is that once I enter a trade, I go for at least minimum of 30 pips from my entry. Maybe it's around here. So 30 pips. Let's see what 30 pips is like from here. So around here, you see 30 something pips around here. So I go for 30 pips, and that's all. From here to here, that's all. I jump out because I cannot guarantee where the market is going to go to. So right now, the market is consolidating here. I'd rather just wait for the market to display what it wants to do, then before you can take any decision in that USD CHF. Now let's go over to US 30. I won a very good, beautiful trade in the US 30. US 30. Let's see. US 30. Where are you? Yeah. Okay, I think I must have cleaned it. US 30, which is an indices. Okay. Now, if you look at the US 30 in the week started from 20th. The US 30 pushed to the upside. It means that what if US 30 works works in proportional to the strength of gold. If gold is gaining strength, the indices like US 30, NAS 100, DXY will be going down. Now in this case, this is US 30. What do you identify as the trend? The trend is pushing to the upside, meaning that US dollar gained weakness all through the week from 20th to what 26 or 25. It's pushing to the upside. So US dollar has been gaining weakness. So what does that mean? It means that this one is going to be going up. So what do we expect? Well, we have to clean the whole structure and reorganize the whole arrangement by setup. But I will not go through that, but I'll be doing some recording in the week to show you exactly what I've done to the indices. Now let's check NAS 30. Yes, yeah, NAS 30. I won a very beautiful trade in this one, very beautiful trade. And then there's this one, and you can see that I marked it. Now what did I do? You can see that the market is pushing to the upside. When it came here, what I did was I took a buy because I could see weak rejection. I drew this trend line touching these two places, this one here, another one here. Okay, this trend line touch here. I drew a straight line, and when the market kissed here, I just took a buy, and it was wonderful, powerful, beautiful trade, and I stopped around here. Now this point is also a very good point to take my profit because two lines are meeting here as well, and there's a weak rejection here. So I stopped there, and wonderful, I just hit this thing solid. Now ordinarily we usually have break and retest, and where the market breaks a structure and retests the structure to show that it's going to gain strength to the upside of that particular structure. Now in this case, in this kind of technique, this kind of multi frame technique, you see, I don't really look at break and retest as such. What I do is that I use Fibonacci retracement to actually support my entries. Like for example now, I'll explain what I mean. Free retracement works for trends. Like for example now you have the market. For example, let's take the market from here. The market is here. It pushed to the downside. It pushed to the upside. Look at this clean push to the upside. Now, if you want to use a free, you go to your free retracement, click it. Then want to know the market is pushing to the upside. We'll take a free from here to here to test where the market is going to reverse. And I told you that I've explained before that there are 3 points in that free where I'm looking at for the market to reverse, and it's going to be, I'll show you. So you click here, you take it up here. If the market reverse around these 3 areas, then it could give you a sign of where you think the market can be headed. When after drawing a fib, what I do is that I draw a counter trend line against the direction of where I pushed the fib to. I will explain. I drew the fib from here upside by to identify a reversal. Because I've drawn the fib from this point to this point, I will now draw a trend line against the direction. Once the market breaks that line, I will take a buy. You understand? You understand me? So that is how I trade. It breaks it, and that's all. Take a buy to the next structure. Yeah, that's how I trade fibs. I trade fibs on this multiple time analysis. So it's very, very important that one understand how the setup is made. Okay, and that will actually gives me so many opportunities in the market. So many opportunities. You can see it in the market. And this NAS 100. Look at this from 20th. After drawing on my 2 highs and lows, identifying the drawing psychological levels are rounded up figures. Look at this one. You know, it's rounded up figures. Then the meets, and you have weak rejection at the point where all those lines meet. Take the trade and watch it, and and jump out. Look at this one, touching this around this area. So it's not like a particular point, but it's a region. You can see region. Guess here you can see weak rejection, push to the downside. You see. So that's how this multi-time frame analysis. Now I'm going to be doing more recordings on live tradings I'll be taking in the next week to explain to you, just as I did in this video. I'll be doing that for next week, so you can see how I took the trade. And I won't be explaining how I won't draw my setup, because if I go through how I start this, how I drew these lines and all that, is going to make my video to be very long and boring. But I'll be explaining as much as possible. And if you have any question, you can just ask me my questions, your questions in the comments below, and I'll be catching you guys next, when trades come up. This is FX Smashing It. If you like what I'm about, please like, subscribe, and share. Catch you in the next one. Always remember to trust the process. Always make sure you practice proper risk management, and never be greedy. Catch you in the next one. Peace out.